Hey, good morning, everybody. Yeah, exactly. It's the same routine. We change the room like once a month. But yeah, you need to register, of course. All right, let's get going here. Hmm. All right, not too much happening this morning. I think things will be happening this week. I mean, things always are, but maybe we're headed for some changes. Maybe pull back. I think it's in the cards. Um, Several reasons. One of the things that I was checking the SPX levels as we do every day. And one of the things I noticed, I'll just see here, things have pulled back a little bit, but they're essentially unchanged, a little off from the high there. Um, you see things are getting a little extended from the 20, and in the past, you know, things pull back a little bit. It's normal. SPX, one of the things I looked at, and I was looking on TC 2000, I get the quotes from there early in the morning. Um, And this looks a little different, but I always check the 5-day average true range just to see what it is day to day. It'll, gets tighter, wider, of course, as things move, but it's a little smoother in TC 2000. I don't know why. We figured the same calculation is done, but one of the things I noticed as I was looking through that, and it kind of makes sense, is as the ranges contract, and it's a little counterintuitive, but as the ranges contract, it displays certainty. It doesn't matter whether you're looking at an index or a stock, as prices start to move either up or down, and the ranges day to day stay about the same. And you can see this concept even on a 5-minute chart and something that's trading really strongly, really overwhelming strong demand or supply if it's going down. And one of the things I noticed was that, as the range comes down, and this has been over the last few months because the market's been going up over the last few months, but I didn't go back and look at past data. But anyway, every time we come down around this level, markets pulled back. Now, back here where the move started, it corrected sideways and then, started to lift off again. And over here, you can see where it pulled back and get a really tight range there. Get a little push away from the 20, market pulled back. And so you can look at market information through many different ways. And this one just caught my eye this morning as I looked through it. So just looking at prices distance from the 20, and we'll cover market internals here. We'll take a peek at them this morning. But even common sense says at some point the market's going to pull back. Now, what we're all interested in over the long term is this one of, in quotes, question, quote marks, is this the pullback type of thing? Well, we really don't know. Um, but we do know when risk for longs is increasing and you see a good setup, smaller position sizing, because we don't know which one is going to work and which doesn't, but we know historically where things are getting at right now, based on different pieces of information, that the markets are likely to pull back relatively soon. And one of the things to consider is it's coming into the middle of the month, which often has an effect. It's an options expiration. We do have a bunch of economic inflation data coming out this week. I think at 11 o'clock, there's consumer inflation expectations. Keep that in mind as we get into the trading day. Um, yeah. And so I just thought I'd share this because I just took a peek at it. And it's not something that I've looked at in the past to say, hey, you know what? The average true range is down at this level and it's likely to pull back. I just thought it was interesting. So I figured, I'd share it with you. Anyway, um, internals, sentiment is getting to an extreme. This is total put call ratio. This is the equity put call ratio. And you can see it's been up here for a while. As it pokes through those upper bands, things are getting overheated. Someone in the green room on Friday said, I think things are getting frothy. That was a good word to say, things are where they're at. But define frothy. That's just a word. We know what that means, but we need to define words like that with concrete information, technical analysis. Oh, it's getting far from the 20. Is it really, really far from the 20? Crazy? Like, no, it's not. But we can just see over the most recent history, about that distance. We don't need to measure it with a protractor, or, a tape or whatever. It's getting closer to pulling back. Now, breadth hasn't reached an extreme yet. It's good and bad. Well, why is it bad? Because we know we're back to the same old, that has been over recent history, except for the end of the year, where a few stocks have been pulling the markets up. But last week, things began to improve and the breadth began to expand. So one of the things we'll watch for this week is, hey, is the market continue to push higher on that data? Does everything just seem Goldilocks like? Breadth reaches an extreme, sentiment's an extreme, markets, wherever they are, distant from the 20, we're going to get a pullback. And at that point, breakouts start to fail. We use the analogy, accidents start to happen. Good looking trends, all of a sudden, some negative surprise happens, these kind of things. So keep that in mind as we get into this week. Let's drag this down. This came down a little bit, but you got to keep an eye on these levels. This is where, a starting point for the day. Last week, none strikes got hit, but relatively small ranges, that makes sense. At some point, the range is going to open up. But, from where things are at here, you would think any type of pullback toward 5,000 is going to get bought. It should get bought. And I covered in the weekend video one of the reasons why, all the big open interest down there. So some of them expire out this week. There's a relatively large open interest at 5,000, and now they're in the money. And going out another month, there's a big open interest at 5,000. So that becomes an inflection point where it should provide support. And it also, just like support, can become resistance, 101. Down below that, positions begin to get unraveled. And based on what I've already said about market situation at this point in time, things could start to retrace easily into this unfilled gap, maybe a little further down. But we see nothing at the moment to suggest a violation of this uptrend could happen, because then it would have to poke below here, this major support. So right now, maybe it continues to go up. There should be buyers on dips. At some point, we're going to get some reversal bar, and we'll see how that happens throughout the week. Other good things that happened last week was the transports moved up and, moved up with the rest of the markets. That's a good thing. The ETF moved up above the prior highs. There's extra stocks in here versus, the cash. And that moved up. I don't know if it's an all-time high. No, it's not, but it's pretty darn close to it. So there was some of the broader market participation. You want to see the SPY chart again? See the 180 reversal, the 1, 2, 3. There's an unfilled gap. Moving away from the 20. So if you want to capture that, little bullish time correction on the hourly after the gap up, closed above 500. So all positive stuff, but at some point things become too positive, right? And things become vulnerable to retracements. Normal. Qs lifting off, starting to move a bit vertical from the 20 MA, unfilled gap down here, some consolidation. About unchanged. It was a little higher, as you can see on the pre-market chart here, whipping around. Russell. So that was, the whip around we got over here. That was on the Fed chair talking. Things went down, recovered back up into this. It's basically a trading range. We got a nice wide range bar on the weekly chart, which broke these recent lows and turned around. So a little consolidation would be positive, and maybe we can go higher. You got to keep an eye on these regionals, which broke down, and that's a lurking issue out there with these commercial properties and the banks. You know what happened with the New York bank, and in the past, last year, what happened back here. Market doesn't seem to pay too much attention to it right now. Doesn't really care very much. XBI, that looks like it's ready to lift off. There was some ugly stuff, like if you look at Amgen, that had an ugly pullback, I guess, after earnings. But, biotech's had a heck of a run, like a lot of other things this year. So far, they're consolidating. You can see the weekly chart being extended, but the daily chart, the 50 MA is catching up. It's at this pivot. It's opening up here a little bit higher, but it looks like something that could move higher. Now, back to the idea of, hey, this is the middle of the month, options expiration, sentiment, and so on. Keep in mind, we'd like to see things go up here into these numbers this week. There's plenty of charts that support that and information that supports it. But that potential of a market top coming together based on what I said, these kind of patterns could turn into M tops. We don't know yet. One of the things we'll look for if this does move up is the distance that this clears this pivot high. We'll see. Interest rates not doing much of anything here this morning, as you can see. I got my question marks. Which way are you going to go? There's a lot of these downside shakeouts that occurred on the Fed chair's comments. Things sold off, and then the markets were like, whatever. He's not going to lower interest rates. Also, we don't care. At some point, he's going to have to do it. Buyers came back in again. Now, that being said, you got this 10-year consolidating at resistance. That's bullish. It's not going back down. We got question marks here. Which way is it going to go? But one of the things to keep an eye on this week, sudden alert here at this 1.2, give or take a little above, because if it starts breaking out above here, I don't think the markets are going to like it because they haven't liked it in the past. The dollar has been grinding higher. It's about unchanged as well, but this has been grinding higher. And when interest rates have gone up, dollar's gone up, market's gone down. There has been a bit of a disconnect with that recently. So things are always changing. 13-week, which we use as a indication as well what the market thinks about the Fed. So they think, okay, the Fed isn't going to lower interest rates and give the market what they want. Well, I see this poking back up here. It's like, is there some bias out there that they could possibly raise interest rates? And I haven't heard that. But when I see this line come up here to this resistance, I don't want to see it move back above it. So I've got an alert. That could be a heads up that something's wrong that isn't so apparent right now. But keep that in mind. It would be a shock, Robert. And I don't think they're going to do that. But is this whole scenario that we're talking about with, hey, it's the middle of the month, options expiration, sentiment is what it is. We know things are vulnerable to some kind of shock should it happen. And this week, this economic data that's coming out tomorrow, core inflation, PPI, on Wednesday, Thursday's initial jobless claims, and so on. If that data comes out and it's shocking to the Fed and the market, and they make some murmurs about, any kind of increase, it's going to get nasty. So that just seems far fetched, but we're talking. We'll see how it plays out. So, we're sharing the things that Dan and I look at on a day-to-day, week-to-week basis, and do with it what you will to, at least it gives you a thought of, hey, you know what? Well, that seems kind of crazy. I can set an alert and see what happens and, be prepared. I hear you, Alex. I mean, that's what I'm saying. Nobody thinks it, but why is that line going up instead of staying low? So, while none of us would entertain, well, we can entertain the thought that anything is possible. It'd be foolish not to. But why isn't it staying lower? I don't know. I'm here to share, the things that I look at and see. We'll see what plays out. Not everything that we talk about is going to happen, but a lot of things happen that we talk about possibilities. So that's the value of what we're doing here. Right? Gold's not doing anything, still in the trading range. Gold stocks went down last week. Silver, tried to get a little higher and got killed. I think that's about it. Oil's not doing anything. It's kind of quiet starting the week out here. So we'll see how it plays out. That's what we do. A lot of uncertainty, and yeah, that's it. We'll see what happens to 11 o'clock. There's some numbers, and then tomorrow numbers. So we'll see day to day, some day trades, and we'll see what we see over the weekend. Was a lot of nice looking setup. So we'll see what happens. All yours, Dan.
Morning. Yeah, we got a huge watch list. Hope everybody enjoyed the Super Bowl. I think it cracks me up. They got all this talk about wanting it to be a national holiday today. I have a simpler idea. How about you move it to Saturday? You move it earlier in the day, 3 o'clock, and you get your ass out of bed. Don't drink too much. Some simple solutions. Talking about Super Bowl dunking, I said I had a bullish bias into the Super Bowl for this very reason. Now it's gapping down, so it could be sell the news. I saw something in Barron's also that shoot, I forget the number. It was either 4 billion, 4 billion or 40, I forget. But they said it's huge market cap now, and they haven't made a penny day one, and that the insiders have been selling. So that's always an excellent indication of my books. They know what's cooking there. LOW, and I got an upgrade. That's a monster gap just for an upgrade. We have a put spread. So there you go. There you go, Trey. But the problem is, just like it's politics, right? You can boil down so many things to money, greed and politics, ego. So I guarantee you, just take that list of mine, and that's the reason they won't do that. Is it's better for them to keep it the way it is. All right, L, so I tighten stop. Let's see what the midpoint is at the open. We might take our money. GLD, Robert. 180, yeah, I'd say 30-minute low. Target 184-ish, 183, 200 to 184 would be the target. But it's down, a bit here on the 15, but sure, it's a candidate. All right, earnings. There's only this one. TRMB 49, so that's a bearish gap. A bearish gap on earnings right there. So there's our low. Exactly, Neil. There's FANG. This is a little weird in the sense of this is buying a company and it's up $5, 3%. Typically the acquire or just goes down, but they're and so there's only one way to look at that the shareholders and interested buyers and so well not shareholders because they're already invested, but the marketplace of buyers and sellers are liking that news. Why it's up $5? End of story. Tesla, we have a put spread, but it's also on my long watch list. Maybe Target just halfway into this gap is all, and they all it's gapping down. So let me set an alarm at 194. They are cutting prices on some cars here in the US. So, that is viewed negatively. General Motors, I was just looking at. It's bullish daily, weekly, monthly. I set an alarm at 3880. BJRI, this Sam's list, big old bull rectangle here, broke out, bullish price action. I have an alarm up here, 3635. And these are a couple of years. Sam, Cake, I have an alarm right there, 3560. UA, put spread idea, sloppier. TRN sell setup, I have an alarm at 1015. Sligan buy setup, bullish multi-bar turn. I have an alarm 4490. KMX breakout, I just posted that as a put spread. Thursday's low, AME. Alex, this is your list. I don't like the red, green, but it's a breakout. Daily, weekly, monthly. USFD alarm just went off. I see my alarm was at 47. That's why that's going off. But I don't trust it. AYY. Up at resistance, but bullish price action negated that red bar. This, I have an alarm at 253. Bullish daily, weekly, monthly. Elon, I have an alarm at 1602, little bull rectangle. QS, it's the 1, 2, 3 is already triggered. But I have an alarm at 765. SIG, nice multi-week consolidation into the converging 2050. Friday was really our entry over Thursday's high, but it has room. So see what that does. Lunar. This would have been a great entry on Friday. That is a total bull flag right there. Sam, remind me what with this AI craze, and I'm just not chasing the ones that are all the Metas, Microsofts that are already up so much. But what I recommend we do this afternoon, look at bots closing breakout. Let's go to TC 2000 and pick a couple of these AI and robotic ETFs, and let's drill down and make a new list of AI and robotic stocks that we can try to get a better reward to risk out of. All right, a couple of alarms went off on weekend trades. Corning here, that looks great. So let's let me just tell them 5-minute high as it go. That looks great. ODD alarm. It's a continuation pattern, but I don't see any prints. My minder went off because it had a print at 47, but I don't see any prints. Oh, bottom right here. I don't know what's up with Mindy, but that's a bear That's a bearish gap, but gap's too big. CVS here. It's a continuation pattern. It's inverse head and shoulders. And the reason I have this on my list is not only that, it's an inverse head and shoulder bottoming pattern, but bullish weekly. I'd say bullish monthly, broke out and pulled in. But finally, it had a bearish Barron's article. So as a contrarian, I'm like, all right, if the article can't drag it down, then that's a plus. And so my up alarm actually did go off. So that's good news for the bulls. So that could be a whatever 10, 15, 30-minute high trade. So I have it right there in the middle window. All right, Home Depot I have as a put spread, but it also could be a directional, but we'll start off as a put spread over Friday's high. I'm surprised it's actually not up more with LOW being up so much, but oh well. And BMR, wow, that's a monster gap, Patrick. That's almost 200%, right? $2 stock, 100 would be $4. It's $6, so 200%, man. But that's what I mean. Let's go bottom fishing in the AI bots world. That's a beautiful bottoming pattern on the weekly. You know, obviously nothing to do now. So I mentioned this lunar, right? That was a beautiful entry on Friday. Look at this thing. I think that tail is real. So it was 140 bucks. All right, cool, Alex. Yeah, that'll be an excellent starting point if you've already done it. But this Exhibit A, you all, is what I want to build a list for, getting on little stocks like this. We just missed it. Or, you know, one of you all missed it. I didn't. All right, KCE. This looks like a low volume ETF, but yeah, I wrote this down because I think it's another bots. So I saw them in Barron's. All right, I got alarms going nuts here. CE, CE, CE is good to go. That was in the weekend letter, I'm pretty sure. Alex, your SIG alarm I just saw go off. Yeah, CE is good to go. I'll catch up later. SIG. I'm not chasing it, but looks good. FFIV, KMX, FFIV, 30-minute high, KMX. All right, I gave that as a put spread. I doubt we're going to get filled though because of the gap. Morgan Stanley up alarm, but that's lagging. That's lagging Goldman. Goldman's a put spread over Thursday's high. Leslie Pool.